Good morning, guys. Good morning. I'm just going to give you a few seconds to enter the room. And look, as usual, we'll get this webinar underway. Okay, look, great. So look, welcome to today's presentation on, as you can see, supply and demand, an essential guide. From me, and as usual, look, guys, from me and the FP Markets team, we're sincerely, I sincerely thank you for taking the time out of your schedules to be with us today. And, this is really an introduction to supply and demand trading. I will be keeping it reasonably basic for the benefit of any newer traders present. Next Thursday, we'll have part 2, where we'll be looking at the concept in much more detail and also reaffirming today's concepts. I must also point out that what I show here today is largely a collection of study which I've found to work over the years. So I'm certainly not here today to say that another supply and demand trader is wrong or right. It may appear how I approach the markets may appear similar to some traders and, of course, different to others. Now, before I continue, if you would be so kind as to just let me know in the chat box whether I'm coming across loud and clear, and of course, the welcome slide is visible. Also, feel free to let me know your experience with supply and demand trading in the chat box. Have you used it to trade? Are you currently using it? And how have you been finding it? Okay, so look, just bear with me, guys. Sorry about this. Thank you, Kevin. Cheers. Thanks, Ben. All right, so look, let's get this going. Right, so although I see some regulars here, which is great, for those of you who don't know me, my name's Aaron Hill, and I'm one of the market analysts here at FP Markets. Look, as I say in all of my webinars, I've been involved in the financial markets for now for more than 12 years, so since 2010, and have largely, been obsessed with the technical side of trading ever since, mainly price action. So one final thing, as we wrap up the presentation, I will be switching to live charts. So please, as I progress through the presentation, please do note in the chat box any possible setups you see, so we can possibly discuss them live when we get to towards the end. So look, any time frame, any instrument, it's fine by me. Thank you. Thanks, guys, for letting me know that you can hear me. Excellent. Thank you. Look, the basics of our disclaimer. Look, I know I do this every webinar and likely sound like, a broken record, but let me just quickly run through the disclaimer on screen. Whoops. Sorry about that. So the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. At its core, what we're saying here is the webinar should be considered as an educational piece and not direct investment advice. Now, as for the session's topics, we're going to kick things off, obviously, with an introduction to supply and demand. So it will be here. I'll introduce you to the 4 basic configurations you will find on the charts. We'll then look at what liquidity is. So we'll try to deep dive, and we'll also try to deep dive into how supply and demand areas form on the chart, and look at why they sometimes hold price on return. We'll then look at identifying supply and demand areas, and also focusing on some of the basic entry and exit strategies. Again, look, let me just reiterate what I said at the beginning. Most of this is through my own experience. So you may not have seen this in textbooks. You may have seen this in textbooks. I cannot really comment on that. But as I said, I'm not here to say that any other supply and demand trader is incorrect or correct. It's just my way of viewing the markets. Finally, we'll have a Q&A session. If I'm unable to answer all questions or you're unclear of anything today, please go ahead and email me and the research team at marketsanalyst@fpmarkets.com. Alternatively, as usual, we also have our support email at support@fpmarkets.com. And look, the team will get back to you as soon as possible. Look, also, if you have a topic you wish us to cover in future presentations, send across your ideas and the team will look at putting something together. Finally, please do remember a recording of this presentation is available through the usual avenues. So FPM's YouTube channel, we have all of our archived webinars there. This is my presentations along with the other presenters as well. We have presentations in Italian, Polish, and a number of languages. So please do go ahead and check that out. Support also send an email following this webinar, which instructs you how to access the recording. Okay, right. So introduction to supply and demand. Look, as I'm sure most here will know, I try my best not to flood charts with bullet points and simply read them back to you. I just do not see the point in doing that. It just seems like a pointless, a futile exercise. Anyway, so what is supply and demand? First off, it's important to understand that a market is any place, right? So it's any place where buyers and sellers essentially meet to exchange goods and services. So think of it as buyers and sellers willingly making a transaction. Look, I'm sure most of you are already aware of this, but I do need to point this out as I want us to all be on the same page as we progress. The law of supply and demand is, shall we say, a theory highlighting the contact or interaction between sellers of a product and buyers for that product. According to the market theory, the relationship between supply and demand balances out at a point in the future. Now, I'm sure you're all aware this is referred to as the equilibrium price. So, as a very basic example concerning the law of supply, let's try and think about it this way: when strawberries are forming or growing, a constant supply of water is needed to produce them. Should a drought form and very few strawberries are then available, people want strawberries more than what's available, so the price of strawberries will usually increase dramatically as a result because demand outstrips supply. An example behind the law of demand is the best one I know is say a famous artist passes away, and the supply of that artist's work will obviously come to an end. Therefore, the demand for his or her artwork should increase as people want to purchase the last few pieces that exist. Right, so as you can see here, supply can be thought of as the amount of goods being sold onto the market by producers. So yes, next one is demand. Obviously, demand is the quantity of goods, of the goods that that consumers wish to buy at different prices. Look, at higher prices, less will be demanded, of course. As prices fall, more of that good will usually be demanded. Look, before I put everyone to sleep, I'm no economics professor. I am sure I'm sure you're not here for supply and demand 101 in economics. I just thought, as I've said, it would be good for newer traders as a basic introduction to this presentation, to have a basic understanding of supply and demand. So what is supply and demand on a chart? Before I get into the formations that exist, I am trying to think of the easiest way I can explain this, so you have an idea of what to expect before I, bombard you with my rather, shall we say, dazzling graphics. But for me, look, supply and demand is an approach it's certainly based on technical analysis. It's specifically price action. It's a price action based technique. This is something I've had an interest, as I said at the beginning, had an interest in for many years. And I've developed a number of techniques, mainly taken from experienced traders. So you find I'm sure you guys can relate, guys and girls can relate, that you see a professional trader and you think, wow, that's a good idea. I can incorporate that into my trading. And that's exactly what I've done. I've found very, very good traders, and I've taken little bits from their systems and I've made it into my own. So, this is not to say that each area I select works out. Any trader or any investor that says that every one of their trades is 99% or 100% accurate, I would really just walk away very, very quickly. While several interpretations of exist concerning structure, technical supply and demand on charts can be defined as clear and noticeable price moves out of an untouched or untested base. This will become clearer very soon. So look, on charts, on all time frames, and in all markets, supply and demand can be viewed by way of zones, or as simply as a base, right? It is believed supply and demand areas work due to unfilled orders left by institutional traders at the base. Now, I will say that no, I'm not changing the slide. Sorry, I've gone on a bit here. I know I'm changing the slide right now. Look, I will say, just before I get into this, some of this is I'm pretty sure anyone that's interested in supply and demand has heard of Sam Seiden. I'm not sure of what's happening with Sam at the moment. I don't know him personally, but I did follow his stuff a lot when I was first getting into price action. I tended to steer away from Sam's work after I retained enough knowledge from his work, and then focused on other traders, my mentor specifically, that guided me. So you may see some very similar approaches here as well. So as you can see, shown on the slide, we have 4 primary areas of supply and demand on the charts. Now, I'm sure you've heard of these. We have the rally-based rally. Let me just get the highlighter out. That's easier. We have the rally-based rally, or RBR, the drop-based drop, the drop-based rally, or DBR or DBD there. And we also have the rally-based drop. Now, these are all pretty simple structures, but they are crucial to understand. Look, for me, my personal opinion and my personal preference is I concentrate mostly on, and you will see this on the charts that I show, I concentrate most of my attention on rally-based rally and drop-based drop formations, which I will explain shortly. I don't particularly like the drop-based rally and rally-based drop areas. This is not to say they don't work. It's just something I've become more comfortable with over the years as they really show me what the market is thinking. Yeah, it's hard for me to explain on this graph, but hopefully by the end, when we hit the chart, I will be able to show you what I'm referring to. So look, traders essentially search for robust areas that form healthy advances or declines out of the formation. So a rally-based rally, as you can see here, is a form of demand and is preferably established within a defined uptrend. I say preferably because over the years I refer more to these. If any of you follow my daily market analysis, I refer to rally-based rallies and drop-based drops as decision points, because that's essentially what they are. So this is something that I believe I've developed, but this is how I see the chart. So I see these as decision points, as big decisions made in the market. I don't really see these as supply and demand, although they are. I just see these as clear-cut decision points. So from these decision points, I look for a healthy advance from the area. This can be one candle, this can be a number of candles, but I want to see decisive action formed outside of the areas. Okay, so we explode to the upside and explode to the downside with a rally-based rally and a drop-based drop. The same can be said for the drop-based rally as well and the rally-based drop. Look, we see a base form, and then we see a strong move outside of the area. A drop, So let me just go over this quickly. So a rally-based rally is a form of, as I've said, there's a form of demand that's usually defined in an uptrend, or at the beginning of a possible up move. As you can see from the slide here. So as you can see from the slide, this shows price movement begins with a small advance. As you can see here, a small advance is seen, and then transitions into a consolidation, or what's known as a base. This is as I've said, this is the range, the consolidation phase, and then follows with a continuation to the upside. That's the basic configuration, and it's the same for the drop base drop as well, and exactly the same for the drop base rallies here as well, and the rally base drops. I'll just go over this just so you're sure. We have a strong down move forming for the drop base rally, which transitions into a base and then follows through to the upside. The same for a rally base drop. It's only a mirror opposite. Guys, are there any questions on these on this regarding this diagram? Be sure to ask any questions you have now, because I'm going to assume that you understand what I'm talking about as we progress. So if there are any questions, do not be afraid to step forward now, and I'll clear up any confusion. Right. Okay. At which point would it confirm your analysis, i.e. for entry? So thanks for your question, Paul. At which point would it confirm your analysis, i.e. for entry? Now, this is something I will go into, Paul, as we progress. But just for now, I just wanted to know if anyone is unsure of the basic structure. So just again, rally base rally. It says it in the title, right? Rally base rally, rally base rally, drop base drop. Okay, it's pretty simple. It's pretty like ABCD, right? We have a drop, base, rally, rally, base, drop, and these are all supply and demand zones. Okay. What I look for, I'm just going to repeat myself, so I'm sure that we all understand. I look for strong movement to form out of the base. Ultimately, the RBR, the rally base rally and drop base drop, should be formed within an identifiable trend. Right, so something I really do want to get across is duration. So how long has price been trading away from either the supply or demand zone? Now, I'm going to use these as an example. So we have the rally base rally. What I like to see, and this is just my personal opinion, I do not like to see a rally base rally form and then price continue. Let me get the pen out. I do not like to see price continue higher and higher and higher and then come back to try and test the area. Because what happens is this area here is then being tested, but it's against the overall sentiment. We formed a lower low, lower high, lower low, lower high, and now the sellers are against us, right? We're not with the overall, we're not with trading with overall sentiment. But so what I like to see is a quick pullback to test that area, to fill all of those unfilled buy orders, to then rally higher. I do not trade any areas that are that have seen price the price has been away from the zone for a considerable amount of time. At this point here, I would not trade that. Some traders do, and they do very well. I haven't really been able to master that trading against the sentiment. Right. Okay. How effective, for the question, how effective do you measure? How do you measure how effective and reliable these zones are? Well, that would be down to you, Thomas. I think that's your name. I'm sorry if it's not. That would be down to you to test this on your back test, right? So I've done considerable back testing on supply and demand. That's why I know the rally base rally and the drop base drop are my areas. And that's why I know that I see them as decision points. That's why I know that I only take these trades with the short duration. This is something, look, by attending this webinar, I'm going to give you the basics, but it's ultimately down to you guys to do the work. Back testing, forward testing. Don't just open a live account and expect you can trade this. You need something behind you. And this is the main, okay, I'm reading your question, Thomas. Sure, but I mean, do you also look at volatility on the candle that creates the zone, or volume? No, I don't look at volume, because we're in the FX market, right? So I mainly trade FX, which is not genuine volume, is it? It's tick volume that we're fed from the brokers. So if you want to trade futures or stocks, then by all means, you can look at the volume as well. What you could do in that sense is you could look for, so as price pulls away, you could look for a decrease in volume on the pullback here, right? A decrease in volume because you want to see a strong volume breakout, right? Volume can confirm the breakout, but then you want to see volume declining at this point. And then possibly you could look even for a confirmation signal here. But how much confirmation do you need? I don't need that much. Once I've seen this, and as you'll see as we yes, I agree, actually, Thomas. Yeah, tick volume is 85% correlated to real volume in FX, but there's no way of actually estimating the real volume of FX. The FX market is made up of interbank dealers, right? The commercial banks. So there's actually, how can we possibly know that there is what the real volume is? There was actually a paper written by, I forgot the gentleman's name, Casper something. He was a bank trader at HSBC, and there was a paper. I haven't got the link, but I remember reading it when I was writing an article on volume. And he came to the conclusion that tick volume is useful. So look, I'm not saying it's not useful in the FX market. It is, but it's just something I don't feel the need to use, as I've developed enough confirmation, I guess you could say, to be confident with this. But yeah, look, if you want to incorporate volume, please go ahead. I've been told by many traders that in terms of volume, if you really want the genuine volume, you need to go to an exchange-based an exchange, as all the volume is registered in one place, rather than between interbank dealers, the major market makers. Right. So we're all clear here. Look, another thing is the zone's freshness. I didn't really want to go into this much detail on this slide, but I'm going to now. Look, Thomas, I'm not sure if you've realized, but I think you wrote in Italian. I'm not sure. I'm not sure what that question means, so I'm going to have to leave that. So look, my next thing is a zone's freshness. I'm sure you've heard of this. A zone has to be fresh, 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 fresh. We've all heard that. It really confused me at the beginning. What do you mean by fresh? Now, I understand what other traders mean by this, but I've seen quite a few definitions across the internet. But for me, a fresh zone, look, I'll provide you this shortly when we get to the charts, because I think it will be easier for me to explain. But overall, a fresh zone for me is obviously a move outside of the area that's not been tested. So this area is fresh, but I also look for this base to be fresh as well. I do not want to see, so imagine this is a resistance area. I do not want to see my demand formed here, because all that is a retest. That means nothing to me. That's no decision for me. All right, you can argue that it was a decision to retest the resistance turn support. I get that, and I totally, I agree. But for me, I've just found that these are not the best for me. They've not performed the best. What I like to see, I'm going into too much detail at this point, I believe, is my area formed here. Okay. So this is the rally base. This is why I like the rally base rally and the drop base drop. I like to see them formed here. Now, why? Why do I like that? Guys, if you can answer that in the chat box, that would be awesome. Let me just draw the rectangle around that. So this is what I like to see. This is my ideal area of rally base rally, or decision point, I would call it. So then I look for that. Now, if any of you guys can answer that, why I look for these kind of areas, that would be absolutely amazing, because you basically done my job for me then in this webinar. If not, I'll continue, and hopefully we have someone. Yeah, it's essentially that. So it's a resistance breakout, but it's what I'm looking for. Thank you, Junaid. We have an area formed below this. So what happens is we've made a decision at this point. A big decision was made to break through all of those willing offers at this point. Now, with all of those willing offers and breakout buyers trapped, right? Because what happens is you have buy stops above here, right? We have buy stops above here, not only because of breakout buyers, but we also have buy stops from those attempting to sell from this resistance. So there's a ton of breakout buying momentum above here. So what happens is price comes back. comes back below that resistance area that's here, takes out any traders that have reduced risk to break even, and also potentially takes out any traders that haven't reduced risk to break even and clip their stop for us to take a nice tidy entry long. So what you're doing, so look, I try to apply, I don't think you can call it market psychology. I guess you could, market psychology, chart psychology. I want to understand where everyone else is trading. I'm not interested really in what I think. I have my structure. I have my structure to try and take advantage of. It may come across as cruel, but I look at structure to take advantage of where I believe pain is in the market. And here is painful because we've had a breakout above resistance. We've had buyers come in and look, they're just trapped. I think this technically is called a bull trap, right? And we come back down, we take out the break. As I said, the breakout, the break-even traders that have moved their stop to break even. How many times have you seen this? It comes back, retests, comes back below the area, and then we look for a decision point at this point here, and it comes and it continues higher. That's within the overall trend. So it's manipulation almost within the trend. Now I'm going to be quiet now because I've gone way too far with that. That was more for part 2 of the supply and demand. So let me just get rid of that. Another point I really want to get across here is location. So I'm not talking about location within a trend. This was really what I emphasized here just a minute ago. Let me see. Here we go. I've got it back now. Location. So I like to see my the best thing to start with for any newer traders here. Did the zone break anything of note? For example, this resistance area. Our zone broke something of note. Now, if you find this area on, say, the H1 timeframe, our decision point on the H1 timeframe, and it breaks a daily resistance, now we've got something potentially good going on here with the potential to rally higher. And we're in a nice strong uptrend. All it is, guys, is manipulation within the overall trend, and it happens every single time. There's, you know, you can even look at there's the basics, right? Higher high, higher low, higher high, higher low. We know, everyone knows, these areas here are just magnets for stops. Are just magnets, right? People have bought here. They know that when it comes back here, traders will try to buy from here. So what happens is price generally can. Not generally, it does at times, whipsaws below here and then continues higher. Now it's below here, we look for an almost a decision point, okay, in this sense. So you're looking to take advantage of it, all the pain below this higher low at this point here. Now, what was the approach? Excuse me. What was the approach back to the zone like? Let me get rid of that. What was the approach back to the zone? Was it controlled or was it heavy? Something I will touch on either today or in part 2. Another point, of course, is the difference between this is a question I get asked a lot. So the difference between a supporter or a supply and demand and a support and resistance. Guys, if you can tell me what you believe the difference is, please do go ahead. But look, I guess you could say that they are essentially both the same things. They're just called different. But, you know, there is a difference for me. A supply and demand zone is something that's more immediate, while a resistance or a support or resistance area is more long-term. So you're looking back in history, but the demand is more immediate. So that would be my main distinction between the two. One other feature I should have really noted is bear with me. Let me just clear these drawings. Okay, so sorry, so look, one other feature before I get to this slide is I always use multi-time. I always use the supply and demand in the form of multi-time frame. So I look for supply and demand on the daily time frame, also on the weekly time frame, right down to the H1 time frame. I want to know where I am on all time frames. Please don't worry. I have a plan. I have plans to go over all of these points in detail today and in part 2. If part 3 is required, I will also look into this. Look into this. So another form of liquidity, another important aspect to be aware of is, I believe, liquidity, right? So, you know, I guess the more appropriate title for this section would have been the psychology behind supply and demand, or maybe even the order flow behind supply and demand. Again, I assume we all have our own take on supply and demand areas, and we certainly will going forward. And more importantly, why they sometimes bounce price action. So a common theory is that supply and demand zones are formed due to institutional movement, the collective movement of the big players. Liquidity, which is the ability of a security to be traded on demand, right? So the willingness of buyers and sellers, the willingness of buyers and sellers, so it's literally that willingness of buyers and sellers. So this is important to understand, as liquidity is generally tight within the base of the area or the supply or demand zone. So knowing this, and really understanding that larger players are active within these zones, we can begin to understand when large moves form out of these zones here. So the large move I'm talking about is this point here. These areas are tradable on return. This liquidity is therefore believed to be created by large institutional traders or large banks, hedge funds, for example. These larger players cannot, like most of us can, I assume, just enter their order into the market, as they generally trade in size. And so they can use the small consolidation zone here, at this point here, to enter the market almost undercover. And they enter where they know liquidity forms. Look, I know this can maybe difficult to grasp, and hopefully by the end of part 2 next week, you'll have a deeper understanding. But I do encourage you to further your understanding before we hit part 2 as well. Now, I'm not saying that this is how supply and demand areas form, but this is the best explanation I've been given by experienced traders I've come across, and it really makes sense to me as well. If anyone here knows how these areas are formed 100%, please do let us know. But really, the markets are made up of buyers and sellers. So hence why I believe that what I briefly touched on it makes sense to me. The main points I want to get across is a basic understanding of the supply and demand zones, the supply and demand areas. I believe, as I said, formed by larger players, and obviously I want traders here to understand how to spot these supply and demand zones on charts with confidence. Do bear in mind that we cannot just simply pick any area and pray it works. Please don't go and do that. This is where you will end up in a lot of trouble if you do not understand how to apply these correctly. As traders, we must have a structured and measured approach if you want any chance of success in this market. One final point: we should never ever assume this should be common sense. We should never ever assume a supply or demand area will form. I really don't see the point in this anyway. To be successful supply and demand traders, we do not anticipate its formation. We simply react. That's all it is. There's nothing more to it. For me personally, upon the formation of a supply or a demand base, we cannot draw it as a valid zone until a breakout occurs to the upside. Okay, so look, these are the key points I look for when I'm assessing the chart. So I look for strong movement. So strong movement out of the base. Let me just draw a quick area of demand, so we're all aware what I'm talking about. Bear with me. So I look for a strong movement out of the base. Okay, strong movement out of the base. It has to be really decisive movement for me to be interested. An identifiable trend. Pretty self-explanatory, guys. We want a trend to be in play. Now, this is the very, very basics. Identifiable trend. So we want a series of higher highs, higher lows, higher highs, and higher lows within an uptrend, and lower lows and lower highs within a downtrend. Duration. I've already mentioned this, guys. I'm just really going over this. I do not want to see a level that goes on for months and months and then eventually comes back to test this area. I have zero interest in trading this. Please do look at this yourself to see if you find anything of interest by doing this. I have no interest in doing this. I personally look for the quick return to the area and continuation higher from that point. Fresh. Look, as I've said, fresh. I do not want to see this area formed on a creation of a resistance turn support. Now, you may argue that if we trading on the H1, if we go down to the M30, M15, M1, you will find a resistance, support resistance. Look, I'm not going to get into details with that because there's always a way you could question something, I guess. But for me, I tend to stick, if I'm looking at the H1 time frame and there's nothing obvious here, let's get rid of that. There's no obvious resistance turn support here at this point, and we break out to the upside from a decision point, rally-based rally, then that's enough for me. Location, again, location. Ideally, I like to see this form under resistance or for a demand and below for support for a supply. I like to see it above support. This is a very basics. You can also use round numbers, guys, psychological numbers. You can imagine this is the 120 area. Boom, there we go. You have a clear resistance area here and a clear breakout to the upside and a retest. There's a lot of traders interested in round numbers. This could be a very good start for newer traders. Just look for objective round numbers instead of looking for the resistances, support and resistances. Base formation. Look, I like to see a reasonably clear-cut, tight formation. But you will find on the next charts that I show you, I do also look for the small kinks. I call them kinks because they're very small. But this is something you can look at when you are more advanced with price action, I believe. But to begin with, I would always just look for the clear-cut bases that are formed. And this is like just a clear rectangle like this. Okay, so a clear, almost like a flag for anyone that's interested in flag patterns. So we look for this to form. So a very, very clear area of demand. We also look at base formation, which we've done. Approach. So look, the approach. I'm going to show you a few examples for anyone that's interested in harmonic trading. This is a really good way of confirming these areas. So imagine prices here. We come back and whoops, I should have had the different one on. We have a B, C, D approach. So we come down lower here and we form an AB equals CD. I'll show you a couple of examples where that occurred. That could be a nice area, nice way of confirming an approach. We can also have price approach the area like this. So a lack of volume. But what is this telling you? This is telling you price is compressing to the area and all of the unfilled sell orders as price is approaching has been taken from the market, the majority, of course. And then once price gets above that high there's little stopping price from rallying higher. So this is another approach you can look at: compression, wedge formations, whatever you want to call it. Differences, we've already gone over the differences between supply and demand. There's not much to it unless you have another way of defining that. So let me clear these drawings and so if it's okay with you guys, I'm going to switch over to the charts. Well, I would if I could find my charts. Just bear with me. Sorry about this. Okay, here we go. Just going to reshare my screen. Okay, so I assume my screen's come. Yes, it is. Yeah. Okay, right. So the first chart I'm really looking at is the pound dollar. Now, the pound dollar needs no introduction at the moment, of course. The pound has sunk. For anyone that's based in the UK, you obviously heard that the PM, I think he has resigned now. I'm not quite sure. Or he is resigning. I'm just going to check right now, actually, just to make sure. I'm not sure. There's so much information coming through on the feeds right now regarding this, but yeah, regardless, the pound has been lower over the past couple of days, right? But my main attention here is this. This is the H1 time frame. Now, I want to ask you guys, just focus on this bit here, and please do try and answer this. Just focus on this area here. and I'm looking at this point here mainly, just to give you a bit more of a clue. What do you see here? What do you see here? If you can let me know in the chat box. Now I'm looking at this low here. This is the lower low. Now I'm looking for something, a decision point below that area. All right, so there's no one really answering, so I'm going to tell you here. The only oh, we have someone. Okay, breaking support sell stop. Yes, there we go. So what we've done is we broke below the round number 120. Now the round number 120 is a key level. Now you may question this because we have actually retested this round number, right? If I zoom in, we've come down, we've retested this round number, but what we've done also is we forcefully broke this low. So this is more important to me than that. So what we've done is we can draw a small, this is what I mean by a kink. Let's get rid of this main box now. We have a small kink area. Now, clear-cut decision point, a clear decision point below this low. Now look at the reaction. It's a to the pip reaction, okay? And the stop on this would have, you know, this 2R, 3R, 4R, maybe move. You know, you could have a really tight stop and a tight stop above there. And that's all you need to do. So, and what about the approach here, guys? What about the approach? What do you see? I mentioned this already. The approach is important. So what do we see? I'll try and give you a clue for any harmonic traders. Comes back to retest the king. It certainly does, Paul. And why does it do that? Because there's unfilled orders from that large break. There's unfilled orders placed at this area. Now we also, adding to this, we have, what do we have? We have an AB equals CD formation. One A, B, C, D. For anyone that follows harmonics, this is a fantastic way to confirm these areas. As you can see, confirmation there. If you want to go into more confirmation, you could look at fibs and things like that. Will the PDF be available on your YouTube page? It will not be available on the YouTube page, but if you want it, you can send me an email and I'll happily send you over the PDFs. But don't forget, this is just live charts here, guys. The PDF is what I've shown on these slides. So there's not really much to it. Most of the learning should come from here. But as I said, there will be a recording of this presentation. So please go over it at your leisure. Right, so I hope you can see this, guys. Look, it's a clear, you know, it's a clear, and there's also, I don't really know what else I can say to this other than it's just almost picture perfect. Breaks this low. This low is important, right? And we are, what are we in? We are in a downtrend, right? Clear downtrend, lower lows, lower highs, lower lows. It's just a perfect area. And what let me just see. Okay, right. So this is basically done at right now. So we could have easily taken our profit off at this point here. This area, this drop base. Remember the drop base rally? We could have easily taken profit off here and ended the day very, very nicely, or the session very, very nicely. Now, there was also this H4 area. Now, this is a bit more advanced, and this is something I'm not going to teach today or show today, but I will give you a brief look at this. Now, this is not the common supply or demand or what's it called? Traditional supply and demand. So what I'm looking for here is more manipulation. I'm looking for this, a whipsaw. So let me zoom in. So I'm looking for a low to form, a high to form, a low to form, and a high, and then a considerable drop. And as you can see, this forms a supply on the return. So it's a fake out supply, if you will. But this is something I can go over in part 3 if you wish. This is another way I look at supply and demand. Over the years, I've seen this work so well. Yes, so this is really it for the pound H4. Now the euro dollar had something interesting in on the euro dollar. Right, so the euro dollar H1. Here we go. Again, another whipsaw area. I should have really gone into detail on this, but look, we have a low, high, lower low, higher high. All right, so this is a complete whipsaw area, and look at the area. Look at the test that formed. For anyone that follows chart patterns, we also have a head and shoulders top to confirm the area. Could have taken a nice trade at the breakout lower here. But look, this is a supply. Now, why is this a supply? Because of the whipsaw motion, and it's the break below the round number 1.04. It's a clear decision. We've broken lower. We've broken below this low. We've broken below the round number. Now, what this has done, Remember what this has done. This is a huge move below the round number. It's almost 40 pips. So we have sell stops, sell stops, sell stops coming in. You imagine if you go down to the M5, how many closes you'd have, how many breakout sellers you'd have coming in the market. So what they do, what happens is price pulls back, slowly pulls back. You can see there's not much momentum here, hardly any momentum at all. And then we retest this area and forcefully drive through all of that mess. Quite simple stuff, I believe, anyway. I mean, we've trapped, it's called a bear trap. We've trapped all of those sellers here. We've pulled back slowly, causing so much pain in this move here. And then price has tested the area. If you wanted additional confirmation, you had a head and shoulders top at this point here on the pullback. I have one more on the Aussie yen, which is an awesome H4 level. What I did have, but that seems to have disappeared. I have it on my terminal. Bear with me a minute, guys. It should be on the charts. I'm not sure. Oh, there it is. It's here, guys. Sorry. There we go. Right. So this is a really interesting chart. I know there's some questions. I see them, but I'm going to get this done first. Right. So why is this an area? Why is this something that you should be marking up? This is the M5, guys. So this is a real short-term time frame. Why is this an area you should be marking up? Now, imagine price is here. Imagine we've not got any of this. Imagine price is here. Why is this why is this an area of interest? Let me see. Do let me know. I'll click to the M30 if you wish, just to give you a better idea. Why is this? Look how well hidden this area is. This area here. This is what we traded. Now, why is this an area? Look, I don't see any answers coming through, so I'm going to draw this up. Look at this. Look what it broke. You cannot get any more decisive than this. That's an M30, probably even a H1 if you went down to the H1. It's clear. It's clear resistance, right? Everyone sees this. Everyone sees this. And we've just formed a lower low, touched it. And look, this just has so much confidence in this area. The market does. So what happens is price breaks it. Very similar to what I said earlier in the presentation. Then we go down to the lower time frames and we look for that decision point. It's here, this decision point here, and it's not formed of any sort of support. It's a fresh zone. All right, we did get a little touch here, but given the overall low, look, it's very rare you're going to find the most perfect area. There's always going to be something telling you that, oh, that's not too great. But as long as all the majority of the ducks are lining up, then you've got a good trade on your hands. And what else do we have? We have an AB equals CD. I think this will be an alternate AB equals CD. For anyone that follows Scott Carney's work, you will know what I mean. At probably, let me just check that. That will be a 1.272%. Fibonacci, yep, there we go. To the pip, guys, to the pip. I didn't even know that one. To the pip. So this is an AB equals CD alternate pattern. Again, it confirms the area for you. It helps confirm the area. And we bounced off the 92.40 fib ratio. So we broke out of that clear resistance. We've come back, quickly retested the area, and we even retested it here. But look what happened on the I would never trade this one coming here, but so I would have missed out on a nice move. But look at this, another AB equals CD. Let me just draw that in. So we have A, B, C, D. And look, another confirming the area. This is how important these decision points are. Again, look, guys, this is an RBR, a rally, base, rally, nothing more. It's just I've decided to call it a decision point because it makes more sense to me because it's forming a decision point that breaks above the higher time frame resistance. Now, there is also another one I really wanted to get your attention to. It's here. Can you see it? I've even drawn the lines. Let's move those lines. Forget this, forget that one. In here, can you see it? If you can point it out and just tell me the rough values, I will draw it in. I'm going to give you a few seconds. Just a rough estimate of the value. You can see the clear-cut decision points. There's a clear decision point within. I've even drawn the red line on for you for what it broke, for what the area broke. I'm going to start drawing it in just in case we're all scratching our head. There we go. Here. That's a clear decision point there, guys. Now, you might say, this is a reaction to this resistance here. It's not. It's a reaction to the resistance, but it's not retesting the resistance turn support. So it comes up, it breaks out, but there's no clear retest of that area. Look, we closed below it. Okay, for me, that's not 92.75. There may be another one, Paul. I'm not sure. 92.75. Oh, you're talking here, aren't you? You're talking this area here. Now, why would that not be a decision point? Why would that not be a supply? For me, if you're looking at my, this one would be for me, for sure. It's just a clear area, and we broke this high here. We broke this high that formed this low, right? So this is the origin of that low. So if you really wanted to get into detail, lower low, lower high, lower low. We're now in a really short-term downtrend. This lower low, this is the origin. I suppose you could say this is the origin, but this is like the midpoint of that move going down, and we've broken above that. So we've trapped all of those shorts at this point here. Anyone that's shorted on this pullback are all trapped. They're taken out. So we know that the next decision point is here. So why not take that trade? Let's take the trade where that decision was made to trap all of those sellers in this point here. Now, Paul highlighted this area here. Okay, he highlighted, I believe, correct me if I'm wrong, Paul, you highlighted this area here. Now, why would this not be a decision point? For me, I mean, look, you're well within your rights to say it's a valid demand, and it is. It's just my way. Okay, why would this not be a valid area for me? Should be pretty easy to see. This is simply because we have reacted. Let me go right in. It's an obvious breakout retest of that resistance turn support there. So resistance here. Let me get rid of that crosshair. The resistance is there. We break out. We retest that resistance. So this is not, for me, this is not an area, a decision point, because there's no decision for me, no clear decision. If that was formed underneath here, around here, then yes. If that was formed here, and we broke out to the upside, then yes, most definitely. That would be a decision point for me. Okay, guys, really, I don't think I have any. I'm just going to check my notes, guys. Bear with me. No, right. Do you have any charts you want me to look at? I didn't see anyone posting any charts they wanted me to look at. But look, I sincerely hope you are seeing what I'm seeing with the decision points. You know, call them what you want. You don't have to follow all of the, the other traders. You don't have to follow them. You make up your own way and understand it your own way. Ultimately, it's you who pulls the trigger, guys. It's you who pulls the trigger, no one else. Whoa, LCID. What's that, Val? LCID. Let me see. Is that cryptocurrency? Lucid. Wow. Oh, is that a stock on NASDAQ, right? Yeah, okay. Let's see what we got here. All right, so I'm on the M5. Obviously, we're pre-market right now, but what time frame are you looking at? 15-minute, okay. All right, so point to me what you're looking at in terms of supply and demand, if you can. I'm just going to see what I can see at the moment. So or tell me the values you're looking at. So I'm not really seeing much. This did come to my eye at first, this bit here, but it's not really a decision point from what I understand. I'm not seeing anything on here really at the moment, unless you're looking further back. It wasn't at 17. Oh, down here you mean, right? Let me just draw that on. Let's draw that on. Right, so yeah, I get what you mean, Val. Let me just go to the M30. It might be easier for me to see. Let's go to the H1 actually. Right, so you do have something in here, I believe. Oh, this is a tricky one. This is a really tricky one. But yes, you could potentially use this here, I believe. I would use this candle here, to be honest. Let's go down to, yeah, I think that'd be enough. yes, this is something here, but, and the gap is lovely. That shows strong momentum out of the area. But what you don't want to see, again, guys, this is just my opinion. You don't want to see price continue higher. All right, from here, you don't want it to form another lower low. You want it to come back, fill this gap, and test this area now. But are we in a downtrend? Oh, look at that trend though, guys. Look at that trend. That's a bit of a touchy one there. And what did we really break? Yeah, we broke this area here, this low here. Oh, this is a difficult one for me because look at the trend. It's clearly to the downside. The immediate bias is to the downside. So I would want to at least see an AB equals CD form into the zone before I even touched this area. But this is, you're right, this is a, on the H1 for me, this would be a decision point, a rally, base, rally. But would this be enough for me to take a trade? Maybe on the AB equals CD into the area? Yes. Other than that, I might pass on this purely because of the sentiment in this market. Look, it's decisive, guys. All right, so we have another. I hope that's good for you, Val. Paul, you said some. Oh no, Noel, dollar CAD. Let's get back to the currencies. Dollar CAD. Okay. Whoops. Okay, dollar CAD. Let's go back to there. What time frame dollar CAD, Noel? Please. Ben, I'll look at your chart in a minute. Euro dollar as well. Oh, we have a nice AB. Whoa, look at this. We have something kicking off here, I believe. Let me go down to the M30. H1 actually. This is nice, this part here. This is very nice. It's been, I wonder what that's like on the M30. Yeah, this is a really touchy one. M15, I just want to see if I can get a bit of a decent base from this. This is really hard, this one. I think this is what you're looking at. No, I believe. That was really nice. But look, this is not a fresh decision point, is it? Right. So look, we have also, if my eyesight's not failing me. Yeah, it is. It is a fresh decision point. This is a fresh decision point. So look, we are seeing, but look how small this kink is. This is so small. Would I trust this area? But look, we also, this is a really nice area actually, but I would be a bit worried that we formed it after breaking this low high here. Other than that, this could be the reason why it's failing or failing-ish. And don't forget, we have a crazy round number. Look at this, a crazy round number just above that. So we can look at this. Let's highlight this on the chart. Just want to see where that. No, I would not be trading this. And this is purely the reason why this round number. This is a key round number. Now, if this round number was above here and formed all of those brought all of those buyers in and then whipsaw below here, then yes, this would be a fantastic trade. But we do, in your defense, we do have this nice AB equals CD confirmation move. This will be an alternate. Let me draw this on so we all know what I mean. This would be an alternate AB equals CD, I guess. No, not even that. So you could have drawn the zone between here and here if you wanted to be safe. But still, guys, with this round number here, every man and his dog is going to be buying here, hence the buying pressure you're seeing. So I would not want to be buying there. Just my opinion, guys, again. Thank you, Noel. Euro Aussie dollar. Okay, let me just quickly look at that. Time frame for the Euro Aussie dollar. Euro Aussie dollar H4. Okay, let's kick this off. Aussie dollar H4. Okay, I take it you're looking for decision points to the downside here. I don't see anything on the H4 right now. What are you looking at, Ben? I'm going to click down to the H1 to see if anything formed on that time frame there. Yeah, there's nothing really telling me that I see anything there. The M30 might be something in here. So this could be this could be something here. This is something that I might be interested in, but it's not great. It's not no, it's not, because look, it reacted from this rally base drop there. This is not really something I would look at unless you have, unless I'm not seeing what you're seeing, Ben. Show me what where you're at. Oh, sorry, you did. I have a buy order on Euro Aussie dollar. 48.74. Let me mark that up. 48.74. Mark that up. So you're not buying on any demand, are you? You're buying on the basis of this support, I'd imagine, Ben. It could work. I don't know. I don't know. This is not how I trade, so I can't really comment on that. I just don't see any decision points at the moment. And given that we have formed a higher high and then formed a lower low, and if you look at the trend, it isn't in your just. I don't know. Just the trend is against this any bullish move on the H4. So I would always be looking at this wave here for the decision points. That's not to say it won't work. It's just something that it's just my observations. Right, I am going to spin things back to the well, I would if I could find it. Let me just so sorry about this. Okay, right. So we are going to wrap things up now. As you can see on the screen, guys, comments and feedback, please do send them to either support@fpmarkets.com or marketanalyst@fpmarkets.com. Now, guys, tomorrow I have an NFP live session. If you're interested, please do come along. That's at 12:15, between 12:15 and 12:45 GMT. And then next week on the 14th, we also have supply and demand part 2. I will go into more detail, much more detail. We can go over more charts. I will recap on what we've looked at today. Following this, I'll be looking at using correlation to improve your trading on the 21st, and on the 28th, we'll look at back testing. It's a very important concept. Guys, Telegram, please do join our Telegram channel or subscribe to our YouTube channel to get instant updates of anything we upload. Let me just check if there's any questions. You are more than welcome, guys. Thank you, Noel. Thank you, Paul. Very much appreciated. Thanks, Ben. I hope it was useful, guys. Look, this is my own way. This is something that works for me, and it may not work for you. This is just something you need to find out through back testing, through experience, and but it's a great way to trade. It really is a great way to trade, and it's very different from many other. What would I look for? Just basic pattern traders. I look to try and take advantage of the majority. If that sounds awful, doesn't it? I do understand that. I look for pain in the markets, and I think that's what I know that's what a lot of professional traders do. So on that note, on that rather positive note, look, thank you very much. Thank you for your time, and trade safe, trade well. And I really hope you took something from it. Have a great day, and I'll catch you all very, very soon. Thank you. Bye-bye.